Hello, everyone. Welcome to today's live session. Apologies for a croaky voice. I think I've got the same bug just about everybody has got at the moment. If you're new to these, we try and run them every day of the week, wherever possible, at 12:30 in the afternoon. And it's a quick look at some of the major markets. So we look at the euro, the pound, stock market indices, gold, and oil. We had an incredibly volatile day on Monday for stock markets, so we'll catch up with that. It does feel over the last 24 hours of thing as if things have been a bit more sluggish, but we'll take a look at these markets and maybe some of the levels to keep an eye on towards the end of the week. Of course, on Friday this week, we do have the US non-farm payrolls. It's a major monthly release. It's the unemployment numbers that come out at 1:30 UK time in the afternoon. So we'll be doing the live session from 1:15 on Friday. So we could see, maybe a couple of days of quiet trading ahead of that. So let's see what happens. But I think that risk warning has been up for long enough. So let's get into it. I thought we'd start with the pound because I think for a couple of reasons. I mean, clearly, if you're in the UK, you'll know how the news continues to be dominated by Brexit. The countdown continues to the end of this month. We're apparently still no clearer as to what's been happening, but there's been a fair bit of news over the last 24 hours. I think BMW and Toyota both saying that a no-deal Brexit makes them very uncertain, and maybe they'll look at moving manufacturing out of the UK. I think the Mini plant was one big feature. Of course, Mini is owned by BMW. So we have seen the pound under some pressure this week, and I think it's the ongoing uncertainty and the sort of pretty negative news flow that we're seeing as we get down towards Brexit. So just to look at really where we've been this week. So since the beginning of the week, we had a bit of a gap open. Let me just zoom in a bit of a gap open in Asian trade up towards 132.50 on Sunday night. But so far, and this level at 9 o'clock Monday morning, it's been the highs for the week. So we've seen the market at its worst yesterday. Was it yesterday? Yeah. Had lost 150 points off those highs from Sunday night. But I think it's interesting. Here we go. If we go back to a daily chart, for the pound, we had gone overbought. We had that massive run up from the middle of Feb, from below 128 up to 133. So we saw a 500-point rally. I think it was saying that maybe it had got a bit overextended. We've gone overbought on the RSI, 10-day RSI, and this had done a reasonable job back in January in calling the top. So the market was definitely due some sort of pullback, and at the moment, to me at least, that's what it looks like. This is just a pullback. So I think we've unwound some of that rally. We've dropped back now a couple of 100 points from those highs at the end of February, and I just wonder if we continue to edge back towards the 130 mark, will we see some strength coming back in? So if we flip this over to the hourly chart and look at some of the short-term levels, and it's really this sort of period from sort of mid-Feb, the third week of February, where we've been trading in a sideways range for a good 5 days or so. But on the downside, it did blip below 130 briefly, down to 129.70. Buyers came back in and lifted the price. So for now, I think it's interesting. I think in terms of watching for a bounce back, I wouldn't want to be a buyer just yet. I think that the trend is still down. We hit the low yesterday so far. If you really had to buy it today, then I think that for me, the closest I would want my stop is the other side of yesterday's lows at 131. But I think in the short term, the pound against the dollar is still weak, but I'll be watching to see what happens if we do nudge below 131, because 130 had been such a big level on the way up. So maybe we'll see it drift a bit into the payrolls on Friday and maybe have a clearer idea after that. So the trend has been down for this week, continuing the slide from the 27th of February highs. But just watch this area down here. I think if we start nudging below 131, I'll be getting ready to watch to see if we see the buyers come back in. Let's see what happens. Now the euro again is another. I've been moaning about just the lack of volatility in the euro. The theme for the euro US dollar last 3 or 4 months has been low volatility. So really, look how tight the range has been since November compared to the end of 2017 and the big move into the summer of 2018. So we've had really low volatility, and it just can't hold on to any recoveries. So we get the market tries to recover, sellers come back in, push the price back down. But the big level to watch out for is 112. So, and these are the lows from November, and also 112.30, the lows for the year so far. So I think a bit like the pound, we are seeing a bit of US dollar strength coming back this week, which is pushing the euro and the pound lower. But I just wonder how much weakness there is left. So again, for the euro, this whole, whenever it's dipped below the 113 mark since November, so below this sort of level, pretty much where it is now, we have seen the buyers come back in. So I think it's an interesting market to watch again over the next couple of days, albeit it might be a little bit boring until we get the payrolls out of the way. And I've just reminded myself, we've launched 3 new markets this week, and there's one that I have been waiting for. We launched the VIX. You can trade the VIX, the volatility index. We launched the US small cap index. I think that's the equivalent of the Russell 2000 index. But the one I think is the more exciting out of the 3. I mean, the VIX is pretty exciting, is the dollar index. The dollar index, I think this is a really interesting market. I can never remember what the breakdown is. So what I'm going to do is try and just do a bit of a sneaky Google on another screen. But it's basically the dollar basket. So it's the dollar against a bunch of other currencies. So here we go. So it's a basket where the euro makes up 57% of it. Japanese yen makes up 13%, sterling makes up 11.9%, Canadian dollar 9%, Swedish krona, Swiss franc, a few other bits as well. Okay, so it's the measure of the dollar against a basket of other currencies. So it's a really interesting way to watch how the dollar has been performing. And this shows you the run the dollar had last year. 2017 was a terrible year for the US dollar. I think it was its worst year since 2003. And it went from a value of about 104 down as low as 88 by Feb 2018. So it lost, what's that, 88, I'm trying to do the maths in my head, about 15, 16%. And then, of course, last year, we saw that comeback from April that really put pressure on the gold price, the euro, and the pound. And so far, sort of since November last year, we've been a little bit sideways, but I think 97, there we go, on our dollar index, sort of 97.70 is a big level. I think if we can break through those highs, we could see another surge of US dollar strength. But maybe you think the dollar has gone too far. But it's a way of trading. If you had a view on the US dollar, it's a way, rather than picking pound against dollar, euro against the dollar, something else, it's a way of trading the dollar against a basket of other currencies. So we'll come back to this because I think it's all the dollar index. So DXY is the easiest way to find it on our platform. Is a really interesting one to watch. Just to strip out, things like Brexit and stuff like that, to have a look at the dollar against a basket of different markets. So that's a new market we launched this week. So we have seen, this week so far, US dollar strength. So this dollar index, we're seeing dollar strength here. That has put pressure on the euro, put pressure on the pound. But maybe in the short term, we did see the highs mid-February for the dollar index around about 97.20. Then maybe it is time for the dollar to turn the other way, and that would lift the likes of the euro and the pounds. Okay, so let's see what happens. We'll come back to that, the dollar index, in the months ahead. We'll take a quick look at gold and oil, and then we'll look at stock markets, because I think we had some really, some mass moves in stock markets earlier this week on Monday. But let's take a look at oil first of all. I think it's been a bit dull. It's been a little bit dull, the oil price. Here's our daily chart. You can see at the moment it's trading just above $56 a barrel. That is pretty much where it was trading on the 15th of Feb. So over the last 3 weeks, we've had a bit of up and down. but no real change. And I just wonder, I've said this a few times now. This market has rallied so hard from $42, $42.50 at Christmas, as high as 58 recently. That's a heck of a move. It's been up by more than a third. It's a big move in a major commodity like oil. And I just think if it's going to run out of steam anywhere, we're probably here. I think this whole 58 to 60 area could well be the ceiling for oil at the moment, in the short term at least. At the moment, we're not seeing much in the way of progress. Pretty overbought. It has unwound the overboughtness over the last week or so. Let's take a look at the hourlies at some of the levels. Of course, we do have this afternoon, at 3:30 this afternoon, we've got the latest US oil inventories. So it comes out every week, and it's always a major event on the calendar for oil. But you can see just how sideways it's been really since this sell-off towards the end of last week. In the short term for this week, 55.70 is underpinning the price. It had a run up yesterday to 57, nearly 57.5, but it's pretty dull. We've got big support coming in at 55. So let's say from a short-term trading point of view, let's say it's sold off on the inventories this afternoon. If it sells off to the low 55s, it's arguably a trading buy, but it's just struggling, as we can see on the dailies, just struggling to make any progress whatsoever at the moment over the last few weeks. So maybe it does need just to unwind some of that strength, have a half decent sell-off, maybe back down to the 52 area and pull in some fresh buyers. But it's arguably looking, I think, a little bit tired up at these levels. Okay, so fairly uneventful few weeks. Now gold, of course, I think gold is interesting because there's a big level to watch on the downside. Gold has slid a fair old amount in the last 2 weeks or so. So we've gone from 13.45 down as low as about 12.82, and of course that run that we've seen in the dollar over the last week and a half puts the pressure on gold. I think someone's complaining about a squeaky door. I think it's my chair actually. I need to buy a new chair, or as you say, get a bit of 3-in-1 oil on my chair to sort it out. I'll try and move around a bit less. So we've seen gold slip from 13.45 back here, and it's interesting, Danny. I still think that recovery is still in place off those August lows. It was always looking a bit overcooked up here. It'd been overbought for a while, but it carried on going up this year until the third week of Feb. So for me, this looks like, famous last words, a healthy correction. So personally, for me, a medium-term target is for a run back up to 13.50. It's just, where does this slide stop? And I think it's interesting where it is now. Let's flip this over to the hourlies. I suppose if you were going to short-term trade it, we do have, I think, sort of pretty half-decent support left from early Jan. The low, are they the lows? They are the lows for the year. So the lows for the year so far in gold, it's this 4th of Jan low. And you can see it came back to it the 21st of Jan and the 24th of Jan, and it's 12.75. Right, so the lows for the year for gold, 12.75. We're currently trading 12.86. Okay, it did slip to a new low for the down move yesterday. Okay, so we have slipped a little bit low yesterday. What's interesting though, it has had a go this morning, sort of moving up to its best levels for a couple of days. So maybe we're seeing a base forming for the price of gold. I suppose if we wanted to build a case here for being a buyer, I talk a bit about the RSI, about overbought and oversold, but I also talk, about the drawbacks of using that just on its own, because it can go, as we saw, oversold when a market starts moving and the market just carries on. The market doesn't care. The RSI is oversold. But what we have had going on the last couple of days in the RSI is this idea of divergence. So the market slips to a low, slips a bit lower still, but the RSI is making higher lows. So this can be a suggestion that maybe the weakness is running out of steam. So for me, if I was a buyer here at 12.86 and a bit, let's see, our spread is pretty tight on gold. 12.87 is where it is to buy now. If I'm seller, just below 12.87 to sell it. the logical place, the tightest I would want my stop, excuse me, is the other side of the lows from yesterday. So I think gold is interesting. Again, with the caveat, we could see a quiet couple of days because of the payrolls on Friday, but it's interesting down here. But the more interesting level are these old 1275 lows left from January. Okay, so we'll come back to it. We'll do this again tomorrow and we'll see how it's performed. But in the short, so 1275 to 1280 is the really big short-term support for gold. If it starts to lose that, the risk is for a run back to maybe the 1250 area, which is where the trend line is coming in. So we could have a couple of interesting days for the price of gold. Right, let's take a look at, I think that's the most interesting market we've looked at so far today. But let's take a look at stock markets. Some massive moves on Monday. So just to remind ourselves, coming into Monday, let's flip this over to an hourly. So as I was saying on Monday, stock market indices are a 24-hour market. So we're looking at the S&P 500 here. So they open, the major ones, the US ones anyway, open at about 11 o'clock on a Sunday night when Asian markets open. And we saw the S&P gap higher on Sunday night. Let me just zoom in. Here we go. So gapped higher, actually touched about 28.20, near enough on Sunday night. That was fresh highs for the year. So it was a really aggressive, really bullish open on Sunday night, which does suggest, okay, there's a lot of pent-up buying out there. Maybe we'll see a strong day on Monday. What happened on Monday? It was the most incredible move. There we go. So on Monday, it did hold initially on the open, and then absolutely tanked in a couple of hours back to the lows from the week before. So enormous volatility to start the week. And so far, these lows did hold. So on the S&P, about 27.65, and the market traded down to about 67, 68. And then since then, it's almost been as if the market's been treading water after that pretty vicious swing around on Monday. So for me, exciting start to the week. I did end up buying. I bought in too late. I'm still in it, and I think I'm almost just flat at the moment. I ended up buying about there. I should have been a bit more nimble, and bought on the bounce off the lows from back here, the Feb 21st lows. Pushed a bit higher yesterday, but pretty flat at the moment. And I think clearly that's the level to watch. For the rest of this week, we had a really quiet day yesterday, but 27.65 on the S&P. We'll take a look at the Dow in a minute. It is still positive. But I think, as we've been saying for a couple of weeks now, if these markets are going to run out of steam anywhere, if this recovery in stock markets is going to run out of steam, then we are here. We are at these big levels. So, we have the highs from October, November, and December. And the S&P, it's about 28, 25, that sort of area. So it's going to be really interesting to see. Do we now see a bit more back and forth? We've certainly seen it at the start of the week. Let's see what the rest of the week brings. For the Dow Jones, let's bring up the Dow. What was interesting, I think, was even though the Dow did gap higher as well on Sunday night, here we go. So here's the gap for the Dow. So that's the start of Sunday night trading. It didn't move out to fresh highs for the year. So it wasn't as ferocious a gap. And it did overshoot a bit on the downside, the Dow. So the Dow on Monday was as high as 26,170 and went as low as 25,600. So we saw a 500-600 point move over the course of a few hours for the Dow. Briefly moved to its lowest since the middle of Feb, and then just sort of banged its way back in to the middle of the range. And again, with the Dow, we're back up here again. For stock markets, we are back up. 26,300 is the level I've been talking about for the Dow. If it's going to run out of steam anywhere, that's the big barrier. So it's interesting that it started off the week really just falling away from that area. Let's see though. Let's see if it has another go up at these levels. So I think it was a really confusing Monday. No extra info from yesterday because the market was really quiet. Let's see what this afternoon brings. Okay, but if like I say, if they're going to start rolling over, if you just look at the indicators in isolation, the MACD on the Dow gave a sell signal towards the end of Feb. The RSI again, it's been overbought for a long time, but started falling out of overbought. You know, so the RSI has been weakening, so the indicators are pointing to the markets being really toppy up here. So again, it's an interesting one to watch. If I hadn't bought, I wouldn't want to be buying today for the next 3 months. I think it's really a decision point up here. You know, and if we can see these markets move above the November, December highs, I think then we are looking on the Dow for a run back up to the all-time highs, up around about 27,000. So it's been an interesting start, much more volatility than we've been used to. So let's see what the rest of the week brings. But the caveat is payrolls on Friday, so maybe cautious trading. So that's it, I think, for the normal markets that we cover. So I think the immediate interesting one is gold, because it sold off because of the dollar strength. You can see on the daily charts, we're back to the lows for the year. Is 1275 to 1280 going to hold? And then for the euro and the pound, because they've sold off, they've been under pressure. Are we getting near to a bounce point? So there've been a couple of questions come in. I think we've only got Disney. Someone wanted to have a look at Disney. So let's have a look at the Disney share price. Bring that one up. Walt Disney. There we go. Let's see why that one might be of interest. It looks a bit boring, doesn't it? I mean, that is, if you'd bought Disney shares 3.5 years ago, they're basically where they were 3.5 years ago. So it's pretty. I mean, it's been pretty uneventful, isn't it? We have these bursts of volatility down towards 100s, and clearly, if you can get Disney shares at 100 or lower, you know, if we did see them collapse to that sort of area, we'd be looking for the buyers to come back in. And at the moment, whenever we see them pushing up to these, 120, 123 area, they just run out of steam. So I think we're almost in the middle of the range, maybe to the top end of the range on Disney. It did go, the RSI, 10-day RSI went overbought third week of Feb, and we have seen the market ease off a little bit. But to me, they look like, I mean, look at this fantastic trend from back here, from 2011 all the way into 2015. There's a great trend to ride then, but over those last 3.5 years, we've just had this massive sideways trend, haven't we? So it just looks a little bit dull. I think it looks like at the moment more of a trader's share, selling on runs up to 120, buying on weakness towards 100 or below, rather than a buy it and a forget about it share. So a bit dull, I think, from an investor's point of view. So someone's asked about the DAX. I forgot to do the DAX. Sorry about that. Let's do the DAX. We normally take a look at the DAX, don't we? I'm guessing pretty similar moves to the ones we've seen in the US. Here we go. So the DAX, again, we're bumping up against big levels for the DAX. So the really big levels running from, let's say, 11,700 through to 11,860. So the corresponding levels we were looking at in US markets. Look how tight the week has been. We've had again a gap up, but really tight trading this week. These are daily candles we're looking at, so not much in the way of volatility. Let's flip it over to an hourly chart. Here we go. So there's our gap open. I think that was the end of last week, actually. Gap open end of last week, and this week just trapped. So again, no real trend so far for this week. 11,520 supporting any weakness. 11,680 to 11,700 stopping any strength, and with it trading at 11,600 at the moment, it's pretty much slap bang in the middle. So again, we need a break either way. I think on these markets at the moment. So I think we could see much more volatility over the next week, particularly from US markets, and that is going to dictate what happens in the rest of the world. And dollar Mexican peso, did we have a look at that the other week, didn't we? Let's have a look. Dollar Mexican peso. Can't remember what I said, but did I say I've been thinking about? Maybe I was saying about being a buyer. So being a buyer of the dollar, excuse me, versus the Mexican peso. So we have seen it. We had this downtrend from December into January. Since then, the story has been one of very gradual recovery for the US dollar. Arguably, that's still in place. If you were a buyer now at 19 and a bit, 1928, wherever it is. I'm not sure how big the spread is. 1929 is where you'd be a buyer now. You know, and you think this trend is going to continue, then the obvious place to have your stop loss is under the low for the year, the other side of 1885, something like that. So it's been maybe a little bit unexciting, a couple of weeks or so, but the bias still appears to be a bit up for the US dollar. Okay, we'll wrap things up there. So let's see. I think, like I say, gold, I think, is the interesting one. We'll do this tomorrow. We'll do this at 12:30 again tomorrow. See what's happening, and then Friday we'll start at 1:15 for the payrolls, and see how the market reacts to the payrolls coming out. Like I say, gold is maybe the interesting one to watch. 3:30 this afternoon, so in 2.5 hours, we've got the latest US oil inventories. So maybe a bit of volatility off the oil price this afternoon. But let's see. We'll do it all again tomorrow. To find out more about the company, go to the website, Capital.com. You can open an account, open a demo account. You get access to all the stuff we've looked at today, including those new markets, the dollar index, which I think is going to be a really interesting one. And to never miss out on new content, I think I'm uploading like a longer term look at the Dow, I think this evening. So if you're subscribed to the channel, if you click on subscribe and the alarm bell thing, you get notified whenever new stuff goes up. Okay, but we'll be back at 12:30 tomorrow. Thanks for coming along, and let's see what it all looks like in 24 hours time.